I'm sure you would have started preparing for the November 2020 exams. Welcome to this GST 2020 series where we'll have a quick revision of the entire GST syllabus for CA Intermediate in 20 modules of just 20 minutes each. Each of these 20 modules will be power packed by infographics, animation and videos to give you a completely new experience of online learning which you would have never seen before. It's just not the presentation, but we have given a lot of thought even on the structure of the module. We have split the entire 20 modules into 4 groups of 5 modules each. In one set there will be 4 learning modules and the 5th will be a revision module which will contain the latest amendments, MCQs and flowcharts. This way you will see an increase in your recall factor during exams. All our study modules are based on the syllabus given by the institute. So we do not give any notes or books. The institute study material or any standard material is sufficient along with these videos. So let us start with the first module on the introduction of GST, and of course we will have infographics and animation, so stay tuned to learn more. India is a democracy and the government spends a lot of money on defense, infrastructure, subsidies and of course remuneration to government employees. The government has to collect taxes from the public to meet these expenses. Taxes are of 2 types. One, direct tax and the other, indirect tax. Direct taxes are those where the incidence or the burden of the tax is directly paid by the person. That is, the tax is paid directly from the pocket of the person to the government. Normally, direct taxes are slab rate system where higher income individuals pay higher tax compared to those who earn lower income. Whereas, indirect tax are normally the contrast of this. In indirect tax, the person paying the tax can also collect the tax from others or his consumers. Thereby, the person paying the tax and collecting the tax need not be the same. Normally, a person who has higher consumption or a better lifestyle end up paying higher indirect tax compared to others. Advantages and disadvantages of an indirect tax in general. So let's first look at the advantages. Number 1. Wider tax base. GST is on consumption of goods and services, and most of the public in a country do the consumption and hence pay the taxes. This helps the government to collect more revenue. Second, the most important, indirect taxes are normally very low on the basic necessities of life, whereas on luxurious and sin goods it is much higher. Thereby, it promotes social welfare. Indirect taxes are on both goods and services and covers wider activities like manufacture, imports, trading as well as services. So most of the economic activities in a country are covered with indirect taxes. The price which is mentioned in most of the products or services includes the tax, that is the MRP includes tax. Thereby, in many cases, the end consumers do not even know that they are paying the taxes. Thereby, the pinch of tax is not much on the consumers. And finally, more than 50% of the revenue of the central government and state government comes from indirect taxes. So hence, indirect taxes really helps the tax collection of the government. Indirect taxes do have some basic disadvantages. Number 1, it is inflationary in nature. Because taxes are collected from the consumer, it adds to the cost of the product or services, thereby increasing inflation in the economy. 2. As the same rate of tax is on both the rich and the poor for the same goods and services, it increases the disparity of income. The rich stay richer, the poor remain poorer. The concept of GST in India was first set up in the year 2000, and after a lot of deliberations, finally on 1st of July 2017, GST was rolled out in India. GST put an end to many taxes in India levied by the central government and state government. Now we have one GST tax across India for all goods and services which are manufactured and sold. Does it mean we do not have central excise or VAT anymore? Well, watch the animation which will follow in detail to know more.
Hi, I'm T2. I want to become a chartered accountant. This is my pet B2.
T2 has big dreams in life, but he has lot of fear of exams.
Ha ha ha, I am exam bhutu. GST is very complicated subject. I make sure T2 does not pass the exam. Ha 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 ha.
Constitution was implemented in 1950, but then how come they introduced GST recently?
Oh, you silly, if the government introduces new laws, they make amendment to the Constitution. Constitution 101st Amendment Act 2016 was passed to introduce GST in India.
GST is very boring subject. T2 will find it hard to focus on. Ha 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 ha.
The Constitution 101st Amendment Act 2016 was introduced. In order to implement GST Act, certain articles of the Constitution of India were amended, inserted and deleted. The following changes were made. Number 1, the applicability and scope of the GST law. The allocation of powers between central government and state governments to make laws on GST. The 7th schedule of Article 246 was changed to provide for the following. Number 1, to continue the levy of excise duty by the central government on the manufacture or production of 5 petroleum products, that is petroleum crude, high-speed diesel, motor spirit, natural gas and aviation turbine fuel. In addition to the above, excise duty is to be also levied on tobacco and tobacco products. As a result, tobacco and tobacco products are now subject to both excise duty and GST. Number 2, even state governments have the power to levy taxes on the 5 petroleum products. Entertainment tax has been abolished except where it is levied by the municipal bodies. Article 246A has been inserted, which is a special provision for GST. The newly inserted Article 246A gives the power to the central government and each of the state government to make laws on GST. However, the central government has been given the exclusive power to make laws with respect to interstate supply of goods and services, which is mentioned in IGST Act. Thus only central government can make changes to IGST Act. Article 269A, levy and collection of GST for interstate supply. This article gives central government powers to A. Make laws with respect to import and export of goods. Formulate the methodology regarding place of supply or interstate trade or commerce. However, the manner of splitting of tax revenue between central government and state government will be decided based on the recommendation of GST Council. Article 279A on GST Council. The President of India will create a joint forum of central government and state governments called GST Council. Finance Minister of India will be the chairman of the GST Council, and each state government can nominate any minister to represent their state in the GST Council. The GST Council will recommend any modification, deletion or making new laws in GST, including important issues like rates of GST tax, exemptions, registration, tax disputes, etc. The central government has a weightage of 1/3 of the voting rights, and all the state governments taken together have a weightage of remaining 2/3 of the voting rights in the GST Council meeting. Please note that decisions of GST Council are only recommendatory in nature. That is, GST Council cannot impose any law. However, for all practical purposes, the decisions taken in the GST Council are the basis for making the changes in the GST law in India. Article 366, addition of some important definition. Article 366 was amended to include the following definitions. Number 1, the goods and services tax means tax on supply of goods or services or both. It is important to note that supply of alcoholic liquor for human consumption is excluded from the purview of GST. Services have been defined to mean anything other than goods. Number 3, state government includes those union territories which have a separate legislative assembly. For example, Delhi and Pondicherry are union territories, but as they have their own legislative assembly, for the purpose of GST, they will be treated like a state government.
Wait, in the beginning the faculty informed us that old taxes, central excise and VAT are still collected. I do not understand this.
The Constitution of India allow all taxes to continue on petroleum products, tobacco products and alcoholic liquor.
Oh, that was very well explained.
Yes, if we follow 5999 channel on YouTube, Instagram and Telegram, we can learn very easily.
Oh my god, T2 is learning very happily. I am losing my powers.
Hello students, I hope you enjoyed the animation. Animation is one of the best way to teach people concepts very easily. We will try to have at least one animation in all our learning modules in this 2020 GST series. Now we'll talk about some basic concepts about the GST that has been introduced. Now the fundamental aspect is this chain of tax credits. So before a product or a service reaches the consumer, normally it goes through 3 or 4 businessmen, either manufacturers, wholesalers, traders, retailers, and then finally the consumer. And each of them, they suffer tax, but our GST allows them to take input of the tax which they have already paid in their business. Thereby, it reduces their tax burden and it avoids the cascading effect of tax, that is tax on tax. Before the GST regime, we had central excise and service tax and VAT. In some of the cases, one cannot offset the tax paid in the other, resulting in overall a higher tax burden on our products and services, which was making our Indian goods not so competitive compared to the global products. This has been avoided to a great extent in GST. So what is the tax now being made on? It is on the value addition. As a business adds more value, that business will pay higher GST. Normally manufacturers do a higher value addition, so they end up paying normally a higher GST compared to wholesalers or traders. This way it brings a sanitary
clarity in the business regime. Thereby, it makes it easy for the government to levy and collect taxes. Finally, who bears the burden of GST? As GST is an indirect tax, it is the consumers who are going to finally pay for the tax amount, and it is the business people who collect and pay the tax to the government. So these are the four fundamental concepts about GST. Now moving ahead, let's try to understand the salient features of the GST that has been introduced in India. Number one, as we have seen in the animation, our GST is a dual GST, that is both the central government and state government. They have the right to levy this tax. However, we have GST Council, which makes sure that unanimous decisions are taken by the central government and the various state governments so that there is no ambiguity in the GST law. Second, and the most important, GST is a destination-based tax. In the earlier central excise, the state where the production or point of sale used to happen, that state used to enjoy the benefit of the tax coming from that particular product or service. But in GST, we are replicating the international standard wherein the place where the consumption happens, that government will enjoy the benefit of the tax on that particular product or service. So let us give an example. If goods are manufactured in the state of Maharashtra, and then they are transported to a retailer in West Bengal and sold to consumers in West Bengal, in GST regime, the manufacturer in Maharashtra will levy IGST tax and the Maharashtra government will not get anything out of it. And then those gets moved to a retailer in West Bengal, and then when the retailer in West Bengal is going to sell that particular product, he is going to levy the central GST plus the West Bengal GST, and the West Bengal government will get the benefit of the tax paid. Of course, the IGST input credit can be claimed by the trader in the West Bengal. Now let's understand the legal framework. We do not have a single GST Act in India. We have multiple GST Acts. Let's look at them. Number one we have is the Central GST Act or the CGST Act, which is like the mother of the GST Act. Next comes the IGST Act, which primarily focuses on the interstate supply and international supply. For all union territories, there is a UT GST Act. And finally, for each and every state government and union territory which has its own legislative assembly, like Delhi and Pondicherry, though they are union territory, they have a separate and independent legislative assembly. All of these have a separate state GST Act. For example, Maharashtra has Maharashtra GST Act, Pondicherry has a Pondicherry GST Act. So these many acts we have in India, but luckily most of the provisions in the state GST Act replicate what is in the central GST Act. Now, the most important question is, how are we going to segregate the goods and services for the purpose of taxation? So in India right now, we are going to be following the international norms, which is the HSN nomenclature of classifying goods. For services, there is no international standard yet. So we are following our own service accounting codes. Now this HSN and SAC, they form the basis of determining the rates of tax. So in under rates of tax, we have the normal rates, which is that 5%, 12%, 18% that we are normally aware of. Apart from that, there are special provisions for small business people who can pay at a lower rate, which is the composite rates, which is 1% for manufacturers and traders, 5% for restaurant service, 6% for other service providers. Apart from that, there are certain goods and services which are fully exempt from tax, which we will cover in the subsequent chapters. As we talked in the beginning, this particular aspect, the seamless flow of ITC, is one of the most important feature of GST. Whether a businessman buys goods or services, whether he procures it within the state or outside the state, he can avail the benefit of taking credit of the tax already paid. However, there are few exceptions which we will cover in the ITC chapter where ITC cannot be claimed. Also, there are certain scenarios where if there is an accumulation of this input tax credit, businessmen can avail refunds. So overall, these are the salient features of the GST introduced in India.
One of the important aspects of success of GST has been the technological infrastructure. We have a dedicated portal www.gst.gov.in. Most of the aspects related to GST like registration, returns, refunds, even serving of notice, replying to notice and much more is done through this single portal. Apart from this, we have e-way bill portal which is exclusively used for the purpose of generating e-way bill for transit of goods. Now we come to the final part of this module. What is the advantage of GST to the business community? Let's look at the key points. Number one is overall tax burden on a businessman has come down compared to earlier regimes. This has really helped them to compete against the international markets. Earlier, we had multiple laws. Each state had a different set of law compared to the others. It was causing a lot of confusion. Business people used to engage a lot of consultants. They used to have multiple forms to be filed, which was increasing the cost of compliance. Many businessmen were fearing to do business in other states. All this has been removed because we have a single set of uniform law across India. The SME sector, which forms the backbone of the Indian industry, they have also benefited a lot out of GST. The threshold limit for registration in most of the earlier law was 10 lakhs, which has now been increased to 20 lakhs, as well as in some cases up to 40 lakh rupees. Other part being the introduction of composition levy for businessmen up to 1.5 crore turnover, which has also helped the small players to compete with the big players in the market. Overall, GST has been very beneficial to India, and I hope government will make it much more easier and better, and things will improve for our business community. With this, we come to the conclusion of the first module. I hope it was a very engaged way of learning. This is our first module and we have 19 more modules to go. I hope you will enjoy the rest. Till then, thank you. Bye-bye.